If you have heard the term FHA loan and have questions about what that means or what that loan product is, this is the video for you. Hey, do us a favor, subscribe to our channel. We have a lot of content coming out. Leave us a comment. Hit that bell. You'll know when new videos come out. We really appreciate it. But today we're going to be talking about FHA loans, and we're going to get started right now. So Gary, we're going to talk FHA, the basics, the understanding. People know the acronym. We should add this to the list of acronyms. In general, at a high level, what is an FHA loan?
Basically, it's a loan that is backed by the government, and that it allows, I'll say, more people to qualify, right? So whether it's credit score, debt to income, different things, down payment requirements. So it just gives more consumers the ability to kind of get the American dream of home ownership. And I think there's an important thing to note. It does not mean first-time homebuyer and or bad credit.
Yep.
So
it does work for first.
It does get lumped in, and bad credit or whatever. We do, little note on FHA loans last year, 50% of our loan volume, almost 50%, is like 47, but we'll round up to 50, was FHA. And
interesting.
Yeah. So, and they've got loan limits, on FHA. So you got to kind of watch on that. And every county is different. So it's about, I think the basement across the country is about 525. The cap is about 1.2 million, depending on, so out where you are, your loan limits can be much higher than ours.
Yep.
Right down here.
And there's an online tool that'll tell you what those loans are and loan limits are. And if you're having trouble figuring out, your loan officer can help you out. So you mentioned down payment. Like, what's the difference from a conventional loan to an FHA loan from a down payment perspective?
Yeah. So FHA minimum requires 3.5%. Conventional, you can do what they call the Home Ready or Home Possible programs at 3% conventional, or 5% if you don't meet the requirements of the Home Ready or Home Possible program. But 3.5% is where you kind of start.
Yeah. So, you're out there thinking, hey, I have to come up with 20% for a down payment. And you're up here in Northern California where everything's well north of $1 million. It's a lot of cash.
Yeah. Yeah.
If you qualify, an FHA might really help you get into a house sooner. It's not a down payment assistance program. It's a traditional loan. You're going to get in. Your equity is your equity. The kind of credit score, what is the floor? I think, is it down to 500? Is that about right?
Yep. Yeah. So 500 to 580 requires 10% down. Anything over 580, you can be at the 3.5.
Okay.
And every lender is a little bit different. They have FHA guidelines, and then you have lender overlays. But for the most part, most folks over that 600, in that most of I think the average credit score in the country's in north of 680 today, anyways. So most folks are hitting that 3.5.
Got it.
3.5%.
So, if you're on the lowest credit score, you don't have a bunch of cash saved up for a 20% down payment. It's it's an appealing product. Is there a catch from an interest rate perspective? Am I going to be paying more from an interest rate if I do this program versus a conventional 20% down?
Yeah, no. So that's one of the reasons that FHA and government loans in general are attractive. FHA, VA, USDA, they're anywhere from call it 0.75 point to 1 point lower than conventional loans. So if you're at, let's say, 7% conventional financing, you're probably FHA 6.25. A little bit of cost to that. There is a funding fee, just like every other government loan. And what that is a small percentage that is charged to the borrower. Typically, you can do it one of two ways. One is you can add it back into the loan amount, or you can finance it as your closing cost. So it's 1.75%. But you can handle it either way.
Got it. And then on, so because you're putting down the 3.5%, mortgage insurance is involved. It's a requirement. So
Hmm.
PMI, private mortgage insurance,
Yep.
it is something you're going to have to, it's a factor you're going to have to
Yeah.
build into your monthly payment, which your loan officer will walk you through.
Yeah.
That applies to all FHA loans.
That's right. Yeah. All FHA. That, you know, it's just an FHA requirement.
Yep. And then FHA are assumable in most. Is that a state by state, or is that a government or a nationwide
Government
policy?
loan. Mm-hmm.
Yeah, government loan.
All government loans. Yep.
Yeah. So I mean, look, if you're out there buying, looking to buy a house, and they're on an FHA loan, like might be something to look at. Somebody that's at a very low interest rate, they're on an FHA mortgage. You can look at assuming that mortgage. It could be a huge win. Anything on DTI we need to touch on? Differences with DTI?
Yeah. So debt to income, we get more flexibility on FHA. So typically on conventional, half of your expenses, you're allowed to use half of your gross income monthly to cover your all your expenses. That's credit cards, personal loans, car payments, mortgage. So if you make $10,000 a month, easy math, $5,000 is your max
Got it.
debt allowance. On FHA, you can go to 57%.
Okay.
So 5,700. So you got a $700 more buying power depending on your, and I will say this from a fiduciary standpoint, we try to keep everybody at 45%, like and below. We just feel like that's a good, like personal fiscal policy that we try to do.
Don't get too far out over your tips.
Yeah. You don't want to get over your skis and just be tied to your house. Right. Because, you know, depending on the situation, you know, there's times that, you know, we advise folks on the front end, you know, hey, if you're up in that 55 range, you know, maybe it's just a spouse on the loan and we know there's, you know, another $4,000 in income coming from the other spouse that's not on the loan, let's say. We don't get too concerned with that as much because we know there's more income, you know, behind the scenes.
Yeah.
But as far as the loan, whoever's on the loan, if both spouses are on the loan and we're at 56, 57%, we always like to have that conversation. Say, hey, look, you know, you need to understand where you are in the in the process. And
and that's an exercise you need to really kind of work with your loan officer and go through with them is understand what the debt to income requirements are, where you stand once your credit is pulled, once all liabilities are out, get a real read on that. Reminder, just give us a subscribe. If there's other loan products you have questions about, leave us a comment. We'll be happy to do a video on them, but yeah, give us a follow there. That would be appreciated. Anything else major from a FHA loan we should touch on here?
Yeah, so I think FHA's got a couple different products. So they got the standard purchase, they've got the 203K, which involves a renovation process. It's a very laborious process. So you're buying a house that is somewhat, let's say it's not going to meet appraisal guidelines and it needs some retrofitting or needs some upfit to get up to standard and to where you want to live. So you can do that. And get part of the renovation budget up
included.
Front, included in the loan. So you can do that. It takes a lot more work. I will say that it's in FHA loans, we usually close in 20 to 30 days. Those loans can take sometimes can take a little bit longer because now we're bringing in potentially a HUD consultant, which is a cost. You've got a general contractor potentially that is, and so there's got a lot of communication. So we do as much as we can on the front end if we know that's the route somebody's wanting to go. But it's not just, hey, submit you a couple W-2s and bank statements and we're off to the races. Yeah, it's a little bit more, detailed, a little bit more strenuous. You've got the streamline FHA. So after your loan seasons for roughly 180 days, then you can do a streamline refinance where if the rates are at a certain point that you can bring your rate down on a streamline
without doing
refi.
A full refi.
Yeah. That's correct. Yep.
That's a pretty nice perk for that product. I mean, to be able to
Yep.
go through that and not have to go through an exhaustive refinance process
Mm-hmm.
to obtain a lower rate, that's a huge plus.
Then you still have cash out.
Okay.
Now, big disclaimer in Texas, there is no cash out for FHA. It is not permitted in Texas.
Okay.
So, any of the other states we're in, we can do an FHA cash out. There are some interesting deals that you can do from an investment standpoint. So multifamily 2 to 4 unit, which is cool because you can use the future rents of the other units, a portion of those future rents to offset your DTI, and then you can live in it and make income. So
off the remaining properties.
Yeah. Off the doors. So there, FHA it really is a good loan. It's gotten a bad rap over the years, kind of like VA, a lot of times due to appraisal, but we like them. We've done a bunch of them, and it's helped a lot of people get into homes.
Yeah, and here the main complaint we hear is mortgage insurance. They don't want to pay the mortgage insurance because it's a percentage. It can be a decent chunk, but I'm telling you, for the ability to get into a property without having to save up a huge chunk of cash, yes, you're going to have to pay PMI, but to Gary's point, your rate's going to be lower. It kind of offsets, but to get in, start an equity on a property is a no-brainer. Take it and run, and you can always refinance down the road into a different product. But it's very, very attractive for. I mean, I'm dealing with a lot of people here, just out of college. Got their first job, want to buy a condo, don't have $200,000 laying around. It's like get going, get in, own. We'll figure out phase 2 when we get to phase 2, but get in the house.
Yeah, another thing to keep in mind, I did allude to the 2 to 4 unit with the investment stuff. So let's say you do buy your first place and it is FHA, and you decide in 3 years you're ready to move on, but you want to keep that as a rental property. Okay. Your current one, you cannot carry 2 FHA loans at the same time.
Got it.
So you would have to be, so when you're thinking about it in the future, you got to be thinking conventional, 5%, 10%, whatever you're going to put down on the next property. So it's always kind of good to keep in mind because we have run into situations where folks are in an FHA home currently wanting to, make that next step.
Got a good rate on it. Like, hey, I'm going to rent this out.
Yeah. And you can definitely rent it out, but you're going to be forced to go conventional.
Yep. On the second property. Yep.
On the second property. Yep.
Awesome.
Yeah.
Well, good information, Gary. I think this is good food for those who are interested in what FHAs are all about. So thanks so much for taking the time. Again, give us a subscribe, leave us some comments. We look forward to it, and more videos coming in the future. We have more this week even. So thanks everybody for tuning in. We will talk to you soon. Have a great day.